A day trader discusses a dead cat bounce trading. A day trader discusses a dead cat bounce trading. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magd.com. The title of the video is a day trader discusses a dead cat bounce trading. Alright, what is a dead cat bounce trading setup? Alright, and how do we trade it? How one can identify a dead cat bounce, a chart, a pattern. Alright, let's get started. Okay, so a dead cat bounce is a bearish trade setup that often occurs after a bearish chart pattern. Right? There are many bearish chart patterns. We can use a double top chart pattern, an inverted head and shoulder pattern. There are also Elliott wave bearish chart pattern, talking about the formation of flat correction and other Elliott wave bearish pattern. We have a 13 specific Elliott wave pattern. All right, I will not dwell on the bearish chart pattern today, but we have a scenario here where we have a bearish chart pattern. So the first condition to identify a dead cat bounce is to find a bearish pattern. Here we have a double top on a 2-hour chart. We are looking at the dollar-yen currency pair. We see on the hourly chart the price has formed a double top, a chart pattern. See how I highlight here, this is a double top, a bearish chart pattern, yes or no, okay? So that's the first condition, all right? You need to understand that clearly, okay? The next condition, we want the price to run fast, to go down very fast. So after the bearish chart pattern, the price must go down very fast. A bit of volatility, okay? If you look carefully on my 2-hour chart for the dollar-yen, after this double top, the price went down very fast. Look at the size of the candle. It went down fast, yes or no? Boom, 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 down. More than 100 p. The price went down from the level of 12500 all the way down to 12400, okay, within hours. Very fast, fast, okay? So, first condition, bearish chart pattern. Second condition, price must go down very, very fast, okay? The third condition is that the price must rally a little bit up. Preferably, should not go above the 50% Fibonacci retracement level. All right? Usually, you will see sometimes you may see it will go up to the 61.8% and then start finding a resistance right there. Okay, what I'm trying to do now, I'm trying to draw my Fibonacci retracement for the fast move to the downside. We want to highlight the 50% Fibonacci retracement level. So first condition, bearish chart pattern. We want to find a bearish chart pattern. Second condition, all right, the price must go down very, very fast. All right. The third condition, the price must rally up, okay, up to the zone of 50% Fibonacci retracement level. The orange line on my chart, that's the 50% Fibonacci retracement level for this fast move from here down to this level here. The orange I see here. So price, we have a bearish chart pattern, okay? First condition. Second condition, price went down very fast. Second condition is now verified. Third condition, the price rally up to the 50% Fibonacci retracement zone and the final resistance right there. This move from here to here, the rally, this is what we call a dead cat bounce. All right? It's a funny word that the stock market, Wall Street traders, has coined for this move. This is a dead cat bounce. Why dead cat bounce? So the cat is dead, but it jumped up for the last time, but it doesn't mean that it is alive. It's dead. Okay, so the cat is dead, but it bounced up a bit. What's going to happen? It's going to go back down, and because it's already dead. What this means to us is that after this move down, okay, the dead cat bounce, which is this rally, okay, because it's already dead. What do I mean by that? It's bearish already, but it rally a little bit. This rally in a downtrend is what we call a dead cat bounce. So what do we need to do at this point in time? We will look for opportunity to sell. Why? Because there's a high chance that the price may go back down, minimum, okay, to this low here, the low of the fast move down. So minimum target for our bearish target is this level here, okay, somewhere near the level of 12382. If the bearish momentum continues, the price may displace, okay, may form what we call the ABCD chart pattern, which means, my friend, the price may go down the same distance as it did from here down to this level here, okay, from this point onward. It makes sense? Are you with me? So price went down from here, 100 pips down, all right? If the bearish momentum continues after the price reaches this level, there's a high chance that the price will achieve the same magnitude in this session, okay, as it did here, exactly here, all the way here, forming ABCD chart pattern. Now, a common trading mistake that trader will make when they are trading a dead cat bounce is to force it. Do not force it. So we want to enter the trade somewhere near. So what are we doing? We are looking for a setup. The setup is the dead cat bounce. Bearish chart pattern, price run very fast now, and then rally up to the 50% Fibonacci retracement level. This is a bearish trade setup. Next step, we must use a top-down trading method. This will allow us to avoid trading mistakes if one just go, okay, and sell anyhow without following the trading drill, the setup, the signal, and the low risk entry point. One is forcing it. We don't want to force the trade. We want to trade like a pro using a top-down trading method. This is about a day trader discusses a dead cat bounce trading. Okay, so to identify a dead cat bounce trading setup, one must first, okay, locate, okay, a bearish chart pattern. Next condition, price must go down very, very fast. Third condition, we want a rally up to the 50% Fibonacci retracement level. This is the bearish trade setup. The rally is what we call a dead cat bounce. Again, once the setup is in place, we must use a top-down trading method. Very often, ordinary trader will just place a trade to sell without a signal, without selecting a low-risk entry point. Remember, if the signal fails, you must come out. All right, be flexible and trade the price. This is not a magic one. This is about high probability trading. It makes sense? So to summarize this video, okay, so if we see a bearish chart pattern, okay, so in this case we are talking about a double top, can be any bearish chart pattern, normal bearish chart pattern, then we want the price to run down very fast, almost vertical move to the downside, fast with volatility. Then we want a rally up to the 50% Fibonacci retracement level. You have to understand that the bearish trade setup is the cause, okay, of the dead cat bounce. Bearish chart pattern has created the dead cat bounce. So some people sold it, and the price rally up to the 50%, okay, they come back again to sell. So people who were buying in this session is what we call also a dump money. They are wasting their time buying. Okay, they buy if they are day trading, that's okay. But if they are investors that buy and stay in the market for too long, they are wasting their time. But if they are day trading, that's fine. At 50% level, the bearish trader that was selling before will come back again and look for opportunity to sell, forcing this bearish, rally to capitulate. It's prior return bar going back down. The minimum target is the low of the sharp move down. Remember that the ultimate target is the equality between the first fast move and the ensuing, okay, bearish move from this point down to this level, okay? So here we are, we have a bearish trade setup. We must use a top-down trading method without violating the market pattern, okay? If the signal fails, we must come out. I hope you have learned something from this video also, and will put into use, okay, to make an excellent, okay, trading decision, and being able to identify a valid, a dead cat bounce, a trading setup. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you love it, please share it on Google+, on Twitter, and also on Facebook. If you love our videos, feel free to subscribe to our channels. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders discussing a dead cat bounce, a trading setup. Speak to you soon.